Good morning, everybody. How's it going? Anmol here. Welcome to another edition of the Swing Trade Newsletter. As you guys know, I've been traveling quite a lot recently. Currently in India, and then I have a flight in about 8 hours, no, 10 hours. Yeah, flight in about 10 hours. I'll be heading to London, and then I'll be there for about 4 days, and then head back to New York. Hopefully, there's no issues at the airport regarding coronavirus and stuff because I heard it's crazy, screening everybody. So hopefully, nothing like that goes down. That being said, what a day, right? I mean, I was recording this newsletter yesterday on a Sunday, trying to send it out to you guys. But then I looked at the S&P futures, which is when the markets are closed. Futures are still trading. So futures were down quite a lot. So I said, you know what? I'm going to hold off. I'm not going to do the newsletter Sunday. Let's kind of wait till Monday so that we can get a better and more accurate picture. And yeah, I'm glad we did that because look at today, right? Market, on Friday closed around 297. Today we got a big gap down all the way to 270. We rallied all the way till 284, but then ended up closing towards session lows around 276. So that's where we are at the S&P. After hours, I guess you're down another 40 cents or so on 275.50. So, markets are down. And I really, really hope none of you are surprised because, I mean, the signs clearly suggested that's going to happen. And we've been talking about it in the newsletter as well. Talked about how we're going to get a decline coming from 339, 340. We got that decline. Then we got that high volume spike. I talked about we're probably going to rally back up and touch the 9 EMA, and then we'll see what happens, right? And I mean, look at that. Technical analysis works like a charm yet again. Because if you notice on the previous one, when I said, hey, market's down, but they will bounce, right? You remember my words from the last newsletter? I said they will bounce because nothing can stay away extended from the 9 EMA. That's just the rule, right? So we were down away from the 9 EMA. We got to snap back to the 9 EMA. All that ended up happening is that we ended up creating a lower high. So, you got your, here. Because see, what is an uptrend, right? Lower high, higher low, higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now it's different, right? We got a higher high, we got a low, and we got a lower low, we got a lower high, and now today we got a lower low. So that is a downtrend, right? So that's what we got today. But again, the same thing comes into place again. That yes, we're down, and as I said, as I've been talking about all of the last few months, I believe this is nothing, right? I don't know why people get scared, but I still believe that this decline, even though that's a pretty fast decline, and I guess one of the fastest in the history and all of that good stuff, I still just don't believe in it. I just still think that when I look at the monthly chart, this little decline doesn't seem like much. So I personally think that there's further downside in the market, just as I've been talking about in the previous newsletter. I think that we're probably going to test the 50 MA on 50 simple moving average right here. We tested the 50, the green line here. We tested the 50, right? And then on the previous decline, we tested the 50. So right now, we're not even at the 50. So that suggests that at least we're going to go down to 50, which will be around 263 to 273. That price level on the S&P, I think that's where we're eventually going to be headed down into. But that doesn't mean we're going to go down in a straight line, right? Nothing goes down or up in a straight line. So looking at it now, same exact circumstances come into play. The 9 EMA is extended. So I wouldn't really be surprised if we see some bounce, right? And then again, we'll have to wait and see what happens on that bounce. Do we get a, like here, we got a lower high. Do we get another lower high, which makes me think we're going to continue lower, right? Or even better is that we don't bounce up there, right? We don't bounce at all. In fact, we go lower because that would actually be better for the market, right? I mean, if the market wants to bottom out, that's how bottoms are created, right? If we go up straight away here, that's not how bottoms are created. You're probably going to get a lower high and continue back down. For a real bottom to be created, we need a flush, right? We need a puke out. We need where, something where everybody's like, oh my God, oh my God, like that, kind of like that. And which makes me think that'll be around the, 260 level, 263 level. That's probably where we're going to get a bounce. So an ideal scenario actually is that the market doesn't go up and it just goes boom, like straight down, maybe on Friday this week sometime, maybe next week, we go straight down, then that could actually leave a bottoming tail and suggest a move back up. But again, still not convinced, although I do think that if you were a long-term investor who exited with me up at the highs on your long-term investments, this is not a bad spot to start getting back in. Now, when I say start getting back in, I don't mean just get back in it, right? I mean start. Start means, hey, let's put on 10% of the position. Let's leave 90% cash, right? Let's put on 25% position. Let's leave 75% and add as we go lower. That to me seems like a reasonable approach for long-term investors. Just don't go all in. Keep your cash in hand in case something bad happens. And news obviously, and it's always funny. Market keeps looking for news. First they're like, oh, coronavirus, and then we get a bounce, and then they're like, oh, Bernie Sanders, and we get a bounce. Oh, oil prices. I mean, every day there's a news, but it's funny because they find the news that is negative, and then they associate that to the price action, whereas technical traders, like, we saw this coming from a mile away, and that's what happened. And for all right, so even as a day trader, it's not been an easy environment for day traders, as far as if you're trading individual stocks, because you get a lot of whipsaw, right, up and down, everything looks the same. But I've been having a phenomenal day trading, past 2-3 weeks since that decline started, because I haven't really done that well as far as day trading stocks is concerned, but I've been trading in and out of options on the spiders, taking advantage of the theta and volatility. And today was another nice day. Made a little bit over $4,000 today. Closed most of them out at the end of the day. So same thing, right? I've been having a pretty solid last couple of weeks, taking advantage of this volatility. Doing short options and basically just acting like an insurance provider, selling insurance policy to other people who are freaking out. And I've been getting a good amount of premiums for that. And it's been a pretty solid week overall. That being said, where do we go from here? I mean, we're clearly sitting at a support level right now, right? You see here, if I zoom out just a tiny bit, you will see that on here, there was a pivot low right over there, right? And then we got another pivot low right over here. And then that's where we're sitting right now. So if you hold that area, you could get a bounce. But again, ideal scenario is you flush it, take out all the stop losses, maybe go to 63 to 57, and we bounce from there. That would be an ideal scenario. But again, the way the markets have been trading, again, doesn't really look like too much buying interest, right? People aren't really getting excited about this drop in the markets, right? They're not getting excited about the drop in the markets. Instead, what they're doing is they're being cautious, right? They're still being cautious, which again makes me think that there's further downside on the cards. And I love it, right? More downside, the better. Better opportunity for me as a long-term investor to get better prices in and again beat the market. And even as a day trader and 1 or 2 day options trader, selling puts has been a phenomenal trade for the last 2 weeks. All right, so that's that. Again, taking a look at the Qs, similar situation. You got another big down day, but what's interesting is today was the first day that Qs actually broke the 200 MA and closed below it, which technically is a bearish sign. But the Qs are sitting into a level of potential support right over there, right? You see these prior peaks, which were resistance, and now we're sitting right there. So if it holds a support, great, we can get a bounce up. But again, I don't get that warm and fuzzy feeling about it. And we closed below the 200, which could maybe even push the Qs down to 181. So that's my opinion. My opinion is that swing trade, right? But be cautious. Don't overly swing trade, right? Because, I mean, if you really take a look at it, what are the markets down? I think the markets are down, I don't know, maybe like 20%, 15%, right? Something like that off the highs. The markets are down close to 15, 20% off the highs, and we're still positive in the newsletter. If you're risking 1% per trade, about 12%. If you're a little bit more aggressive like I am, I risk 2%. So, we're still making 24%. So if we make 24%, markets down 24%, that actually means that we're doing 44%, right? 40% or so better than investing in the market. And that's always been my goal, is to beat that. Now, today's decline was super annoying for me as far as swing trading portfolio because, just been choppy is one word I can say, right? I mean, our ANAB got trailed out today. We got into the stock at $17.90. And then, we had raised our stop loss to 16.68. And then on today's decline, we were taken out for a small loss. So again, not a full loss, took a small loss. It is okay. Move on, right? No worries about that. And then we had our LRN that also trailed out for a small loss. This one, we got into this trade at about 21.06. Original stop loss was 1880. I raised my stop to 1996, and I was taken out for a small, tiny loss. What was annoying, the most annoying situation for me today was this freaking EQT. Ugh, god damn it, right? We got into this stock on Friday at $6.40, and it was looking really, really good. Today with this big market gap down, we just got shaken out. Gap down, it stopped me out right at the open. I got stopped out, and it actually, this is so annoying. Came all the way back up and actually closed in the green. And at one point, it went to 792. So we would have actually been up nicely on that trade had this market not shaken out the long positions. But that's okay. A lot of people say, why don't we just hold it? Why do we get stopped out? I'm like, hey, right? Stop losses are good for you. Now, in this one, it hurt, right? Because instead of losing 1 hour, I lost almost 2 hours on this trade, right? Double what I was intending to lose on it. But that's life, right? Because, it bounced right now. So in hindsight, it looks good. Oh, we should have held it. Who knows, right? Who knows? What if the stock closed at $4, right? Then you would be down 4 or 5 or 6 times what you were planning to risk. So for me, I don't mess around. I just take my profit and close it, or take my loss and just move on to another trade. It's not worth gambling on, right? I don't gamble. Okay. So that's that. Right now in the newsletter, we don't have any open positions. Another annoying stock was Yelp for us on Friday because we were looking really good. We shorted Yelp right over here. And actually, this would have been our target today on the Yelp, right? So we shorted it right there. Got a nice move down. I lowered my stop loss right over here. Then on Friday, the markets were looking weak, right? Markets were looking weak. I went to my 5-minute chart like that on Friday, and I said, okay, Yelp is going down. It's coming back up, and then it's going down again. So I was like, okay, so I guess it's in a downtrend. So let's just protect. And I raised my stop loss right over, lowered it, and we got out for like a small gain, right? We made money on it, but we got out for like a small gain, like half hour, and then on Friday, hold on, let me zoom out on Friday, kind of show you what I'm talking about. Right there, actually, was Friday. Right over there, right? So that's kind of what happened is that Yelp went down like this. I lowered my stop. It took out the low of the day too. That was the interesting thing. Then it came all the way back up and took us out. Today it did the same thing for a lot of people, right? Kind of bounced and then eventually rolled over. So Yelp would have probably hit our target today if I held it, but it's okay. I'm one of those traders who doesn't regret things. I think there's a lot of hindsight traders, a lot of them, right? Hindsight traders. Oh, you should have just waited and lowered the stop over here or and blah blah blah. Yeah, easy for you to say, right? Easy for you to say. You gotta have money in the game. If you don't have skin in the game, it's a different story, right? Once you're risking your own money, once you're watching the market craziness going on, you follow your trading plan. That's in the end, that's all that matters. Hindsight doesn't mean much in trading, right? Everybody is a profitable trader on hindsight, like me saying, "Oh, look at that! I should have just done this and lowered the stop." Yeah, who knows, right? What if it bounced all the way up, right? Just like many of our trades have. So I stick to my trading plan. I do my thing, and then I let the chips fall me their way, and that's that. So again, took a little hit today with small losses on ANAB, LRN, EQT. Ended up being an irritating loss, but overall, again, we're still doing phenomenal in my opinion. Because usually on this big market down days, a lot of people get crushed. A lot of people get stopped out of things, right? Whereas, yeah, we just stopped out, but still didn't hurt, right? We're still outperforming the market by 2x, which is actually 2 or 3x, which is the best part. All right. So that's where we're at the moment. Currently, we do not have any open positions, and I'm actually not even watching a lot of things. I'm watching potentially EQT for a re-entry because even though it might look like it went up quite a bit, you look at the higher time frames like the monthly chart, look at the higher time frames like the weekly chart. I still think that they've got more run, in them on stuff like EQT. I think these things could probably go higher, maybe into $10 or $11. So I'm watching this for a re-entry, but I need a better pattern to get in it. I just don't want to blindly get into this, but I'm definitely watching that for any re-entry. And the only other thing I think I was watching was Groupon, right? Like Groupon on earnings got killed. The stock dropped from like 3 to 2, and now it's like 98 cents. So Groupon is now officially a penny stock. I've been watching this every day to get into it, but it just hasn't given me any sign to get into it. So that's why I'm like, you know what, let it go, right? always wait for a sign. Nothing is down too much, right? Stuff that is down too much can keep going down too much. So you always have to wait for a pattern. In this case, I didn't see a pattern to get in it. I'm waiting for maybe like a nice green candle, and maybe that could give us a signal to get into the Groupon, right? So that's what I'm watching, but again, don't want to just jump into it. Another one that I've been watching is APRN, Blue Apron Holdings. I think if this thing gets back above like 340, 350, maybe I'll keep an eye on it for a long idea. But again, in the meantime, not interested. I'm actually liking this Rite Aid again, right? So Rite Aid, we've traded a bunch of time. We made money every single time trading this. And I'm watching another potential entry above 17. So if it gets back above 17-ish, probably goes for another run. So that's saying, again, that's again a watch list item. I'm actually not in the mood of buying anything right now because, I think that we still might have a little bit more downside on the market. And I would rather save my bullets, right? Save my bullets and get in lower, get in a better prices on a lot of those things, right? So I did a lot of scanning and I literally don't feel comfortable recommending any trade at the moment. And that's the name of the game, right? Sometimes you guys got to be patient. I think a lot of people focus too much on trading and not enough off on actually, you know, um, what do you call it? Actually making money. Like they focus on taking trades. They're like, oh my God, I got to do something. Market's moving. Relax, right? Relax, right? Saved money is better than lost money. That's something you got to keep in mind. All right. So that's that. And even speaking to a lot of my buddies who I guess run small firms and hedge funds and stuff like that, they're in the same boat. They're like, well, we're not really buying right now. We're just scaling in, right? Maybe let's say if they sold everything, maybe get back in like 5%, 10%, and they're still holding the bullet as well. And personally, for me, they were asking me, Anmo, what do you think, right? So I got a call from a lot of these guys. I usually do consulting for them as a technical analysis because a lot of the technical firms, a lot of the hedge funds, money management firms, they're very good fundamentally. They don't know anything about technical, so they call me and they say, hey, where do you think it's going? And I've been telling a lot of people I still think that we got more downside. So they're like, all right, well, I guess we'll wait. So so that's the boat that we're at. Speaking to those people are putting in like 5%, 10% back, maybe 15%. Some are putting in as much as 25%. But a lot of traders are still not comfortable holding. And my advice to them was a better price to get into would be in this 263 to 257. And in my opinion, that's the price where I'm going to look to get in, right? Like 257, 263. Maybe I'll put in like, I don't know, 50% and still keep 50% for like in case we go down further. So that's where I stand on the markets. Let's take a look at the market internals here. Let's take a look at the internals. So taking a look at the market internals indicator, let's take a look here. So again, looking at the McKellen oscillator, still in deep oversold territory, right? Deep oversold territory. But again, you can see here it's not able to move back up, which usually means there's a lot of selling going on. Personally, for me, my opinion on the markets, I already told you, but I'll do this here for recording purposes, so we can go back and see if I'm right or wrong. 262, 263, I think is the level where we get any sort of substantial bounce. I don't think we're going to get a substantial bounce before that. And as I said, we are sitting at a support level. If it holds, then great. I personally don't think it's going to hold. And if it doesn't hold, 263 is the level. And that's the level where I might say, you know what, let me get back in like 30%, 50%, something like that. So 263. All right. In fact, I'll just say it, like give it a broader range. I would say 257, 263. All right, 257, 253. That's in my opinion. I'm going to leave those lines here so we can take a look at it in the next newsletter. 257, 253. I think that's where we potentially get a bounce. I don't think we're going to get any substantial bounce before that. The way the charts are trading, and you can even see that over here. With a simple trend line analysis here. Trend line, trend line, trend line, trend line. And then trend line held it, right? Tried to hold it on Friday, and we broke it today. No support. Once tomorrow or sometime this week, the low of Monday gets taken out, takes you straight down 257, 263. That's the level on the markets where I think it's a good idea to maybe start getting back in long term, right? Assuming you did get out here, right? I don't want anybody to average down on that just because of you're losing trade. If you exited when we were talking about it, yeah, 257, 253, probably a good idea to get back in, 25 or 50% of your position. All right. So that's where we're at. The markets. I want to take a look at gold, GLD. Gold moved up as well again today, but not a lot, and which is obvious. We were extended on gold too. That's why this one hasn't been able to run up as much as the market's been. So keep that thing in mind. The other scenario I want to take a look at is USO ETF of the oil. And as you guys know, today there was news between Russia and Saudi Arabia, getting into price war. And then Saudi Arabia lowered their prices of oil, which caused a big gap down today from 850 to 650. I really hope you guys are not surprised by this. We spoke about it. And that's my goal in the newsletter. I figured out my goal. My goal is to make you not surprised of anything, right? Like market, we spoke about. Oil, we spoke about it. I've been talking about all the time, right? And I remember just like people called me crazy, a month ago when I said market's gonna crash, and they're like, "Oh, Anmol, come on," I'm like, "Well, I've never said it before. First time I'm saying it. I think I'm right this time." And markets came in, and I remember in 2013 or something, I made a call online. This was on a radio show when I said, "Well, oil's gonna crash," right? And they were like, "Wow, this guy's crazy. There's limited oil in the world. Oil price is actually gonna go up." I'm like, "Well, I don't know about you. I see a bear flag pattern here, right?" Oil broke down, and they were like, "Oh shit," right? And then if you take a look at over here, let me actually do this so you guys can get an idea. So right over here, where is that? Yeah, right there. So taking a look at oil using USO ETF here, okay. What do I see again on a monthly chart? And again, we talked about it, right? We literally go back and watch last week's newsletter or the week before that, where I drew a bear wedge pattern again on oil, and I said, well, I think oil is going lower. Right? I got a lot of emails from people saying, "Hey, what about buying at $9 or $8.50?" And I'm like, well, that's because you are looking at oil in this fashion, right? You're saying horizontally, which is fine. But I'm also thinking that, hey, a new bear wedge has just broken down, which could take you further. In my opinion, I would say like $5 is a good number. I think that's just like a magnet where things could get sucked into. So $5 is an every. But I'm watching. I'm watching oil for a bounce, right? Despite me thinking long term, it still goes lower. Definitely now it's in my radar for. And the reason it's on my radar for a bounce is not because, as I said, there's a great pattern, or not because I think oil is gonna, bounce or anything. The main reason is that again, the 9 EMA rule, right? You guys remember my 9 EMA rule? Same thing kicks in now. So now that the big gap down happened on oil, all right, you look at where the 9 EMA is on the oil, right? It's still up there at about $9. So as I said, nothing can stay away from the 9 EMA for too long. So it's possible that oil maybe try and go up a little bit and then maybe continue its downtrend, but I think it's going to try and go up a little bit. It's possible tomorrow you get another gap down on oil, in which case look out for your emails. I might buy it, right? My goal is to buy it as close as $5 as I can. Okay, so don't be surprised, right? So if tomorrow we wake up and the markets are gapping down, hey, maybe I pick some up around $5, $6, right? Maybe get a dollar stop loss under 5 and see if we can bounce back up to maybe 9 or 10. So definitely on my list of bounce candidates, but that doesn't mean I just blindly buy it, right? What are the ways that we can buy it? Well, again, as I said, if it keeps going lower, maybe we pick some up around $5.50, $6, right? Or let's say if we gap up tomorrow, then not a bad idea to just say, all right, let's do this, right? Long stop loss, see if we can fill the gap, right? If you gap up above it, so that might be a good entry as well. If you open flat, I'm not really interested, right? I want to get it on a gap down or a gap up, and not really on a flat open. Those are tricky to pick the direction on. So right now, as far as stocks is concerned, I already talked about it. Not comfortable buying any long position, not comfortable shorting either, because it's possible you short, market holds support, gaps up, your short stops out. You go long, market goes lower, your long gets stopped out, and that's not the environment that is fun. I don't like that. So in this environment, I'm focusing on just selling, put options on spiders, on stuff like that. Again, if you know options, if you know how to do options, but by the way, if you don't know how to do options, you should take my options course. It's inexpensive. Usually all our courses are like what, $2,000-$3,000. I think the options course is like 497, 697, something like that. You can email info to find out. And I think there's also special, like you sign up for 1 year of newsletter. I think you can get the options course for like a very like ridiculously low amount, like $100, $200. So my suggestion, take the options course. It's been a fantastic environment. I mean, just last couple of weeks, I made a freaking solid return um, trading options, and I think that's the way you play the bottoms, right? Novices are the ones who try to just buy the market on a downward sloping market. I think that's novice trading, right? Rookie trading. You need to know options. Anybody who doesn't know how to use options, I mean, you're clearly missing out, right? Clearly missing out because the way you use this environment, again, I'm not going to go into detail because that's not what the newsletter is for. But the way you trade these environments is you pick whatever you want, right? Pick the 5 best stocks that you want to buy or have always wanted to buy in your long-term portfolio. Maybe you wanted to buy, energy stocks. Maybe you want to buy, I don't know, Apple, whatever, right? Pick whatever you actually would want to buy on a decline, and then don't buy it. What do? Well, you sell puts even down further. So if they go down further, you guess what? You own them at a discount, and if they don't go down there, you get free money as a premium. So that's how I think about it. So for example, one of the trades that I've personally been eyeing is like I'm looking at energy sector, kill, right? Like just huge move down, right? When I look at the monthly chart of XLE ETF, I mean, look at that. You're coming into historical lows. So I'm like, you know what? I don't want to buy it at 33 because it possibly go to 28, right? So why don't I sell, let's say, $28 puts or $20 puts, maybe expiring next year, right? And you can collect money to do that. So if it actually goes down there, you get to own it at a discount because you already got premium. And if you don't get to own it, guess what? You get free money. So that's the environment. That's how I think you guys need to be trading bottoms. But again, I don't want to dive into options in the newsletter. I don't want to confuse people. So take the options course, you'll get it. Okay. So that's that. And let me see what else to do. Is there anything I want to tell you guys? I don't know. Let's take a look at Russell Small Cap ETF. Small Cap ETF, same thing. And this is why I thought on the previous decline that we're not done yet because you had a double top on the small cap sector. Small cap usually leads the market down, and down we come. So I still think that we test these lows on IWM, which are another $5 down from current levels. So IWM, in my opinion, has another $5 of downside before hitting some support. Dow Jones, I think, got another $10 drop potentially to go down or more. Spiders, I think, maybe I would say another $10 to go down potentially. And I take a look at the NASDAQ. I see NASDAQ is the worst. I mean, there's some support about $5 away. I think that should hold for a little bit. If that doesn't, then you're going down to like 150. And again, nothing would surprise me at this point. I could absolutely see the market going down to 150 on the Qs. I also think that spiders could be setting up a double, like a head and shoulders top potentially, which basically means you got your left shoulder. Hold on, you got your left shoulder like that, right? You got your head like this. So maybe you come down here, you try to bounce. That bounce fails, and you go down even further. Again, I wouldn't be surprised seeing the market go down to 208. Really, I wouldn't be. I hope that happens, but I doubt it. So that's the market for us, guys. Again, stay out of trouble. It is a shorter newsletter just because I don't really have any stocks that I want to call at this point. I would just say stay tuned. Watch out for emails, and if I get to take a trade, I'll let you guys know. But in the meantime, cash is the position to be. Cash is the position to be. And I'm telling you already, place where I'm going to buy is going to be this 257 to 263. I'm not really interested in getting in the market before that. So I'm just going to draw this line just like I drew the top over here. I'm going to draw something right over here. How do you draw? I'm trying to find out. Okay, hold on. How did I draw last time? Text? Is that right? There you go. Call out? No. I don't know. Well, you guys know this zone right over here. Okay. There you go. I'm going to find it. Where was that thing that I drew? There you go. Rectangle. So that's the zone where I think some level of bounce can happen. If that zone doesn't hold, then obviously, naturally, we go down all the way here. But I think for now, that's the level to keep an eye on. 257, 263. That's an area I would definitely start looking to get in a lot of long-term stuff. I'm also going to be thinking about adding a little bit to my Uber long-term investment. Currently, I'm in this stock long-term. I've been selling covered calls, so it keeps lowering my average price, which is good. But maybe around 25 if I get an opportunity. I'll probably add to this long-term trade. But again, I don't want you guys to follow these ones because these trades are investments, pure speculation, right? No pattern, nothing, pure speculation. I don't think anybody should be speculating if you don't have the funds to do that. So that is where I stand on the markets. All right. And as far as stocks, we looked at gold, we looked at oil. Um, those are the main things to look at. I mean, I know some of you guys look at Bitcoin. I still don't believe in this thing. I've been talking about it for a while that people get excited on these bounces. But again, unless you take out resistance levels, bounces don't mean anything, right? Back down on the Bitcoin, potential support around 6,500. But again, I'm just not a big fan of it. I don't really watch Bitcoin. It's not worth it. A lot of the currencies have recently been crazy too. Um, Again, not like you guys care about currencies, but currencies have been on the move recently. And I'm just not I'm not excited. I don't know if people get excited on these drops, but the reason I'm not excited is because to jump into stuff is because, as I said, I don't think we're done yet, right? So if I don't think we're done yet, then there's no reason to start buying positions in this territory, in my opinion, unless something really compelling comes in. So, for example, EQT, I'm considering re-entry. The reason I'm considering re-entry is on a big down day for the market. This thing gapped and then closed green. That's impressive, right? So that's something I'm going to be watching. But again, doesn't mean I'm just going to get into it. But if I do get into it, I'll be watching an entry probably above like 750 area, above that. So that's where I'm going to be looking to get in, but not at the moment. All right. So that's it for today's newsletter, and I will be back touch base with you guys next weekend. But I'm pretty sure throughout the week, if we do get another sell-off, which I think we will, then look out for my emails, and we can potentially look to take opportunity on some of these trades. So have a good one, everybody. Send me your questions if you have them, and ideally send me your questions within 1 or 2 days of watching this newsletter, so I can actually go over and respond to your questions. So I know you guys email me questions all the time, and I know I don't respond back pretty quickly. It's not because I'm ignoring you. It's because I get 100 plus emails every day. And this is not just a joke. Like, I'll really show you. If you want to see my inbox right now, I'll show you. Just 2 hours ago, I finished responding to emails. I got my emails down quite a bit. And even right now, you will see. We got 7,000 emails left, which 100 of them came in today. So that's why. It's not like I'm ignoring you. Emails get lost in the track. It might be a few weeks before I email you. So here's how you email me, right? Here's how you can get a response. I want to make this newsletter where I can answer Q&A too, right? Doesn't have to just be newsletter. I can answer questions on this newsletter. So send me your questions to anmol@livetraders.com, right? Title the subject of that email newsletter question, newsletter member question, right? And then in the email, just simply write in that question, and please don't just write it in small sentences like, hey, here's the question that I have, boom boom boom, straight to the point, right? Because sometimes I'll be frankly honest, it's again, love responding to emails, I love reading to emails, I try to respond to everybody's email, but if I get a long email like a paragraph or two, then usually I'm not going to get to that, right? So the best way to get your questions answered would be to subject the email newsletter member question, so I know you're a newsletter member, I can give you priority, right? And then simply just state the question, right? Like, to the point. Here's how I want to know XYZ. How do I do XYZ, right? What do you think about XYZ? So then we can talk about it in the next video newsletter. I can pick the top 3 or 4 questions and answer those. All right. So that's that. But yeah, that's where I stand on the market. I think pretty clear analysis. This is exactly what I think at the moment, and we'll see what the next week begins or brings for us. I can just tell you, keep cash, right? Keep cash, because if something bigger happens, then you want to be having cash, right? And expect the unexpected. Expect the unexpected. People say all the time, biggest drop, fastest drop in history. Well, guess what? History is meant to be broken, right? New history is created all the time. So just because something has hit historic lows or blah 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 historic down date doesn't mean anything. Markets, the way they move is price discovery. Market is only worth what the next person is willing to pay for it. Simple, plain and simple. So ignore the hype, ignore the news, trade your plans, right? Have your plans in place. Like I told you, for me, I saw today's drop. I've been selling options. I've been making a good amount of money doing that every single day. And I said, okay, long term, you know what? I'll get back in a little bit. I got back maybe 5% of my position today on today's decline, and the next 50 to 60% I'm going to deploy around 257 to 63, right? And then I'm going to still leave about 30-40% in my reservoir in case something bigger happens. All right, so that's kind of my plan, and that's what I think. So have a good one, everybody, and I'll see you again in the next edition of the newsletter. Again, no trades for this week. Also, San Diego, a live mentorship event is coming up. San Diego, May 16th, 17th, 18th. There are literally only 5 spots remaining because on any event, we usually only take 10 to 20 people. We don't take more, right? Only 10 to 20 people. 10 to 20 people. Jared and I are there all 3 days from 8 a.m. to 5 p.m. We're going to sit with you and we're going to, kind of show you everything, how we do everything, trade live in front of you. If you want to watch us trade, we'll watch you trade. We'll help you set up your layouts, basically help you set up your business plan, your trading plan, everything. So after the event of 3 full days, you walk away with trading being your career, right? Or trading being a really good source of side income that will potentially even replace your job. So that's the goal for event. Again, 5 spots remaining. Registrations will close soon. If you're interested, drop me an email. We also have payment plans. So, usually our last event we did in Miami was like $10,000, right? And every other event we've done is usually between $4,000 and $5,000. This one is the same. It's $4,500 for 3 days, or you could even do payment plan like $1,500 or something like for 3 months. So only 5 spots left. Drop me an email. On that note, see you on the other side. Again, stay out of trouble, guys. Stay out of trouble. We've done a phenomenal job this year already, and it's only March, right? It's only March. We got like the whole year to go, and I'm pretty confident we're going to triple the returns that we've already got. So have a good one. See you in the next edition of the newsletter.